The market is blood red today, and in this video we're going to go over some upcoming things to look out for and why it's so red today. But you can see around me just a sea of red. Pretty much everything across the board is going down. But in this video we're going to look over why stocks are so red today and also some upcoming catalysts to be aware of, such as the Fed meeting and some data that will let us know where inflation is going and where inflation's at. So let's kick this off. If you like these videos, these market updates, consider hitting the like, subscribe, ring the notification bell, and let's see what's going on today. But basically we got some job data showing that the labor market is still strong, meaning that the market is fearful that we may see more interest rate hikes. And the markets are now actually seeing a 95% chance of a hike in the July meeting. And while job openings did decrease to 9.8 million in May, this decrease only took away a portion of April's increase, and we're still way above March's levels, meaning that the labor market is still tight, meaning that the labor market is still strong. And also the quit rate increased by 2.6%, which basically means that people in the job market right now see the potential for finding another job. They believe there's a lot of jobs out there, so they aren't valuing their current job too much, and that's why these numbers are pretty high. This is the highest level since February. Now we do have some dates coming up that you need to be aware of and you need to look out for, because these can definitely move the market around. We do have PPI coming out here, and this is going to be scheduled on July 13th. And let's look at some numbers of where PPI is actually currently at. You can see that our previous announcement of PPI, we're actually at a 1.1%. And that's really good because this is typically a leading indicator. If producers are paying less, that can typically be translated to consumers paying less, meaning a lower CPI. But just looking at this chart, you'll see that it's in a clear downtrend. And within the next couple of prints of PPI, we may even see deflation here, meaning under 0%. And we also have CPI coming out, and this is going to be one day before PPI comes out. This is going to be coming out on July 12th. And looking at CPI, you can see it's in a downtrend as well, while it is still above where the producer price index levels are. And our last reading, based on May, it came out in June, it basically is set at 4%. The Fed's target is 2%. But remember, this upcoming data that we get over the next couple of months are going to reflect some of the previous rate hikes that we got. These rate hikes take a while to be felt all throughout the economy, and to me it's basically a process of waiting. I really don't think we need to see more rate hikes, and I believe even if the Fed continues to pause from here, PPI and yes, CPI will continue to go down. Now the producer price index and the consumer price index are going to be very crucial things to watch as we approach the Fed meeting coming towards the end of July. We'll get all that Fed meeting information on the 26th, but it starts on the 25th. So while it seems very likely that we're going to see rate hikes, I think we still have to wait for CPI and PPI to come out to kind of see where things are at. If these drop pretty drastically from where they were previously, I think the likelihood of rate hikes will drop considerably. The market isn't going to be seeing a 95% likelihood of rate hikes if CPI and PPI continue lower. But that's it for this video, guys. Keep an eye out on upcoming data, the Fed meeting, of course, CPI and PPI. And I just wanted to tell you guys what's going on today, why we're so red. The market sees strong labor market as a bad thing because it means it's more possible for the Fed to raise rates. But I think regardless of all that, regardless of if we see one more rate hike or if we just pause from here and months from now we start seeing rate cuts, I think honestly it's all sort of irrelevant, and we are through the majority of rate hikes, which makes me much more bullish on the stock market, although the economy can continue to face struggles. But remember, the stock market drops way before the economy shows that it's in pain. And the stock market will also recover long before the economy recovers. Investors are always looking multiple months out, and most people know that towards the end of this year, we are very likely to start seeing rate cuts, regardless of if we see another rate hike here or not. But that's just my opinion. Let me know what you guys think. Do you think I'm wrong? Do you think I'm right? Let me know down below. Thanks for watching this short video, and I'll see you guys later.